Alex Caviezel, who's Managing Director and Emea Regional Executive at JP Morgan Treasury Services. Alex, there are three themes at Cibos this year: regulation, rebuilding trust and recovery. Is the oncoming onslaught of regulation likely to significantly alter the business models of global banks?
Well, as many of today's participants at Cibos will remember, only 2 years ago in Vienna, we were faced with a financial meltdown, much of it caused by essentially bad management at financial institutions, but also incomplete application of rules that existed, the regulatory rules that existed at the time. So clearly there is going to be, and already we can see, a swathe of regulations that will affect our business. Now, these regulations are going to have a significant impact. We estimate a number of interesting figures that I'll quote to you that come from JP Morgan Equity Research. If all the regulations were to be implemented as scheduled, for example, there would be an impact of additional capital requirements for financial institutions globally of $221 billion. Furthermore, in the impact of regulations on ROE would take ROE down from about 14% to about 5.4%. If we were to try and get back to the ROE that exists today, that would imply an increase in cost of services of approximately 33%, and indeed, if those, if the ROE targets were to be approximately the 15% target, then the cost of services would be more likely to be in the range of 39%. So you can see that one way or the other, the impact of regulation on the activities of global financial institutions is going to be huge, whatever the ultimate outcome will be.
Do you think the banking industry is doing enough to address regulation and regulators' concerns?
The banking industry is very well aware of the need to essentially change its approach. I think what is, however, very important here is the fact that a regulation that will be implemented has to be sensible and not punitive. So as a whole, the banking industry should be joining up and working to essentially achieve those sensible regulations and have a voice at the table. And at the end of the day, that's one of the most important aspects of being able to influence the success of that regulation is the input by the industry in itself in creating meaningful regulation.
On the question of rebuilding trust, has the level of trust between financial institutions changed since the last Cibos in Hong Kong?
The crisis reminded us all in financial institutions that we really needed to get back to some basics. Whereas in Hong Kong we were only 1 year after that particular event, and it was palpable still that financial institutions were trying to work their way through that level of mutual trust. I think a further year on has meant that we're a lot further down that path, and we, as a business, have over these past couple of years reasserted those fundamental points that we really need to focus on. So it has come back to making sure that we are delivering services to our clients, that we are maintaining levels of reputation, that we are pricing credit appropriately and pricing risk appropriately into our business models. There is a sense, therefore, that a lot of those building blocks are now back in place. So, yes, I would say that overall that level of trust has been re-established.
When it comes to a recovery, do you think the industry needs to compete or to collaborate in order to work its way out of the economic slump?
Well, it has to do the two. On the one hand, financial institutions have now focused much more on their core competencies, and that means basically leveraging areas that already exist, such as the channels that SWIFT can provide, for example. So the work that has been done around EBAM, the work which is being done around SWIFT Lite, all of that is a good example of cooperation amongst financial institutions to provide real value-added services to the client base. On the other hand, however, financial institutions still have the opportunity to compete, and they can do so along many areas, be that around client service, be that around operational efficiency, or be that in providing real high value, real value added solutions to the client base.